Good morning, folks. It's Harry Swaminathan. It's April 23rd. It's about 7:15 a.m. And what we are going to be looking at today is Netflix. Netflix reported earnings. Netflix reported fantastic earnings, and they've given a good outlook. Now, this is exactly what we were expecting. And so, if you look at, and you can see the Netflix right here, it closed at 174 and it's going to open around 216. And if you recall, our short strike is at 220. So let's take a look, see what's going on here. So I had given so much room. Yesterday, Netflix was around 168 when I put this short strangle. So the room on the lower side was only so much, and the room on the higher side was all of this. And believe it or not, Netflix is threatening the upper strike. That's just unbelievable. But I think we should be okay. This trade should be fine. This is, of course, a speculative trade, but sometimes the price overreacts in the aftermarket when the earnings come out. So we'll have to see how it'll open. But I'm pretty sure it's going to open very close to somewhere between 210 and 215. So we are going to be looking at how to adjust this position. And that's one of the reasons why I took this position itself, not in the immediate weekly, but in the next week's weekly. We are showing a current profit of $2,300 on this trade. However, that number might change. It actually might become better because we're going to see a vol crush. The volatility is going to get crushed out of this. It was at around 107%. Let's see if it's still showing this morning. It was at 109% when it closed yesterday. So that volatility is going to come down. And I'm not sure, I think it should come down somewhere close to about 75 maybe. So we're going to see about a 25 point reduction in the volatility. So even if you look at the Vega effect, that's 371 for each point. So I don't think the trade is going to be in trouble, frankly, even though it's threatening our bear call. I mean, our short call on the at the 220 strike. But what we want to do, obviously, is we want to be able to adjust this position, make sure, because our break even is at 225, so we still have a little bit of room. And I think the vol crash is going to make up for this massive movement in Netflix. So that's what I'm going to be trying to be doing. Obviously, if there is, if this short put is going to be doing very well. So, if there is a good enough profit on this trade, I'll probably close it out. If not, and if there's just a, I don't know what kind of a loss I'll be facing on the short call, but the short put is going to be doing very well. And let's see how much we paid for the short put. For the short put, we paid 380. So, that's a 3,800. 20 contracts. So that's $7,600 profit. This should be very, very close to zero at this point. So, we're going to be booking a $7,600 profit on the short put for sure, or very close to it, at least a $7,000 profit. Now, it depends how much the short call is going to go up. I don't think it'll go up a lot because of this volatility crash, but of course, it remains to be seen. Let's see how the market opens. Wanted to see if we had any other positions. Google, yesterday I put the 2 contract adjustment, which I had sent a video out in the morning. So now we have a positive delta of 139. That those 2 contracts are losing a little money, but that's okay. So if you see the risk graph for Google, let's see what it looks like. And I'll need to put 2 expirations. Yeah, so it's flattened out. So that's exactly what we want. We're nicely sitting in the middle here. Our max profit, even after putting those 2 contracts, is about 18,000. So we're looking good on the Google. Sorry, is there's some simulation here? No, there's not. So this is our real trade. Now, if Google continues to go up, what I would want to do, because as you can see, this is an uneven condor. We've got on the put side, we've got a $20 put spread. On the call side, we have only a $10 spread. So what we might want to do to even things out is put another $10 bear call at say 850 or 860. So again, this was the trade that I was planning to be in the trade of the month last time, but then the earnings cycle came and interrupted us. Then I moved it over to the May series. So the Google is the trade I'm focusing on for this month, because there's a good potential to make a lot of profit on this. So what I would want to do to make the condors more even out, I would, we keep these two contracts, and if Google continues to be bullish, then we would open up the 850, 860, something like that. So, we'll try to even out the condor in terms of the risk. And if we can manage it so that it stays right here, then over the next, let's see how many days are left. I think we have 24 days left for this. And so we should be able to, I would like to profit, out of the max profit of maybe 16,000. And then if we add some more bear calls, we're probably looking at about 20,000. So I do want to make the Google trade the trade of the month. So if anybody is following this, we can try to make this a good trade for the month, and we'll adjust it and manage it properly so that we can make a good profit from this. So that's about it. Let's see. And then LinkedIn went up a little bit, so that's doing well. We don't need to worry about that. The Goldman Sachs, of course, we're just going to see what the situation is. So basically today we are looking at how to manage the Netflix trade for the day. All right. Thanks, guys. Hope you have a good day. We'll speak to you soon. Bye-bye.